This video is sponsored by Bityard. With over 400 cryptocurrencies to choose from on their spot exchange, dozens of USDT pairs for futures trading, perpetual coin futures, trade commodities like gold, silver and oil, Forex, and major indices like Nasdaq. You can buy crypto from Bityard with over 50 different fiat currencies using Visa, MasterCard, Google or Apple Pay. If you like, you can use their copy trade facility, follow other traders who will execute trades on your behalf, or become a copy trader yourself. So if you want a bit of that, click the link in the description. Hello everybody, welcome back. Let's have a look at Bitcoin. I'm just going to focus on Bitcoin, and I'm going to start my new bot journey. I think next week. Well, next week might be a bit too early. The idea is I'm waiting for the next leg down, the next large leg down. I'm going to pick up either Ethereum or KCS, and I'm going to see if I can recreate the magic that I did in 2020, where I basically turned $1,000 into $50,000. I don't expect I'm going to be able to do it as fast as I did last time. It was like 4 months, but I'm going to try and recreate that genius that took place around there. Anyway, outside of that, let's just focus on Bitcoin. So we're going to look at short, medium, and long term. There's some pretty interesting setups going on for the long term, and I would argue the point, which is that on the next big leg down, and I'm talking like the big one, if we get to scrape the lower 20s, it would be time to go hard and heavy. You know, all those people that ask you, I don't know how long you've been in crypto, but ask you, oh, what's all this crypto business? When's it a good time to get into crypto? I heard Elon Musk has been buying crypto, and and it was pretty much at that point where most people started to want to get in. Which was, you could see that with the altcoin situation, but generally speaking, it was kind of marking a kind of a top. And then finally, when Matt Damon came in and said it, I mean, that was it. He broke it. He broke the situation. Anyway, all those people that have basically come up to me, I said, look, I think you've missed the boat. To be honest with you, at this point, you've missed the boat. The best time to buy in is when nobody wants it. I'm going to start talking to those people again and say, listen, you remember back a year ago and you were asking me about crypto, and I think now is the time to buy it. Do you know what I bet their response is going to be? I know what their response is going to be. I read on the news that it's not a good idea, and that there's lots of warnings, and I've seen that it's gone down a lot, and I don't quite like the idea of buying it. It's a cyclical event. Do you know what's going to happen though? Matt Damon will start talking about it when it's at $100,000, and then, you know what? I think you're right. I think it's time for me. Anyway, I've digressed already without even speaking about the price action. So it's going to get to that point where those sort of people will receive a call from me. And again, these are like friends. I'm not going to be DMing people, so just bear that in mind. I will not DM anyone to ask them to do anything silly with their money. But they will get a little nudge from me to say, listen. I think now is getting close enough to the time for the low to be marked, and we can talk about those. We'll do it in reverse then, shall we? And I suppose there's a bit of a recap of things that we've already gone through. So first of all, we have a general bottoming area, which is your 200 simple, 200 exponential. Marking those areas off currently is around 22,000 for the simple, 25,000 for the exponential. And if we have a look on this is your weekly. This goes back obviously a couple of cycles, so almost a full 10-year history of trend line. We've got bear market end. Black Swan event, only a little wick down, but effectively accumulated on it. And now we are testing and teasing this area once again. If we zoom in close enough, we can see that 25,000 was already tagged. This is dollar, not tether. 25,000 was already tagged, and it could easily get tagged again, 25,000. So this area being a general bottoming area on the log scale for the last 10 years. Okay, that's one thing for you. So between 22 and 25. Again, I suppose that's a big deal for anyone who's trying to use margin. But if you're not trying to use margin and you're just buying spot, the 25 comes in at the 200 exponential, and the 200 simple comes in at just a 12.5% less than that at the moment. Remember, this is weekly. This moves up ever so slightly every week. I mean, the exponential's leveling off, but the simple's still moving up nicely. So we're looking for each week higher supports, probably just by a few $100s. And anyway, this is an area. It's not, you might see it get tagged exactly, but but it's an area. So this moving average as well as this trend line, again, I hold a great deal of weight onto those zones, right, for marking a bottom. We also looked at the weekly money flow index, didn't we? A few videos back, saying that we get divergence on the money flow index when the bottoms are coming in. The low being printed here in August 2018, about 6,000 or so, 6,003, and this bullish divergence on the money flow index, printing what was more or less the low, the absolute low, which was 3,200. It's fair enough. That's a good mark off there. We also saw that take place over here, so we were consolidating nicely after this parabolic move up from the 3,002 to 14,000 in a very short space of time, leveling off nicely, double bottoming over here, which was also quite good, and then a black swan event taking place, marking once again bullish divergence. And if we just have a quick move over to recent price action, consolidation, downtrend, bear market, whichever you want to classify it as, and an absolute overextended low there, very low there, and obviously it's going to be hard not to print bullish divergence as a result of that. Each one of these printing bullish divergence last week, this week, next week. The idea is this can continue to go lower, which is why we're marking these areas off and expecting, I suppose to an extent expecting them, but would not be surprised if it were to be hit. But we are having a similar kind of read as we had over here, marking the low. I mean the absolute low. Similar read over here, marking the low, and I'm talking the absolute low. And we're having a similar kind of read over here, marking the low, the absolute low. But because it doesn't tell you the price, we have to navigate our way through where that could possibly be, and it would be between $25,000 to $22,000, give or take, and that's your moving averages plus your trend line. So that's your long term, literally looking to spot a bottom on the next big leg down. That would be a bottom for Bitcoin. It would most likely be a bottom for altcoins. But with the altcoin situation, what I can show you, obviously, is the Bitcoin dominance doesn't favor an altcoin position currently. But this doesn't mean it doesn't favor an altcoin position overall. So you'll see, obviously, as we all see, there's many altcoins out there that are getting taken to wrecked city and beyond wrecked city, right? So those low prices, provided you're buying an altcoin which has a projection, of success in the future, will probably end up outperforming Bitcoin by many times over, provided you haven't bought an absolute pile of crap, basically. The only thing that you'll have to be concerned about is time, because if you're looking for, I suppose, instant gratification or to outperform Bitcoin consistently, you're probably not going to get that with this kind of setup on the Bitcoin dominance chart. You'll be much better off buying into altcoins from higher levels on the resistance, but it doesn't mean that buying altcoins down here or on this next big leg down is a bad idea, literally provided you haven't bought an absolute turd, because these prices will be so low, ridiculously low, that the returns, if and when the market gets back into a healthy scenario, will be much bigger than anything you'll get from Bitcoin. But again, I've been through a variety of rotations within just the crypto market, and what you'll end up doing is you'll be annoyed and you'll be upset because you'll be sitting in an altcoin position which is not moving, while Bitcoin could be doing 20%, 50%, 100%, and your altcoin is basically doing nothing, and it'll be frustrating. You could just be looking at it and going, if I'd bought Bitcoin, I'd only be up 20%, 40%, 60% or whatever, but it's better than being up no percent or less. And then obviously good things come to those who wait. If your altcoin is one of the good ones, then of course you'll be probably doing hundreds of percent more than Bitcoin in the end. But this kind of setup doesn't promote that kind of activity. The chances are altcoins, especially the top cap ones, will move with Bitcoin, but they will probably lag in this situation. Now, I have spoken, and I still do believe that a miniature alt season will take place around here, but it will only be miniature. We could call it an alt rally, just to stop upsetting people with the alt season word. You said alt season. My altcoin only went up 100%. Well, I suppose, definition of alt season for me is a period of altcoins outperforming Bitcoin due to the dominance chart showing reversal of market cap. But if you want to call an alt season by a different definition, that's your problem, I suppose. Anyway. So yeah, well, I'm still focusing mostly on Bitcoin, but I would be looking for a minor rotation around here, but I wouldn't want to get clever. I would literally try and scale out after 10% gains on altcoins if and when this starts to take place. And again, I would look to take the to pull the trigger on altcoin trades using my Bitcoin while we're in this zone, not on the first pass, while we're in this zone of resistance. Right, so let's hear it then, shall we? Let's have a look at the lower term time frames. Here we go. Bitcoin on the daily, looking sad when it comes to its price action. Rejection on the 10 exponential for what was now been basically, you know, the best part of this month. The MACD, yeah, it's got a bullish cross. Fair enough. Histogram is still green. Fair enough. It's slow. That's right. The resistance is pushing us. Pretty much is going to push us below the support at this rate. So I will be looking for this to break it one way or another. The range is so small that it's pretty much a non-tradable environment for anything really. You can't really trade this. The resistance is here and the support is down here. The thing is though, it's going to break one way or another, and that will cause a decent move. Now it can break out and go up. Breaking above the 10 exponential has the power to move up to the top of this range, of this descending triangle. Again, it's a bearish formation. The bearish formation being that the resistance is lower every single day and the support stays the same, so it's going to push us back down, and the returns being diminishing each day because we get lesser and lesser and lesser of freedom to move up to the top of the range. But that is a possibility. We could be moving up to the top of the range. Obviously if we did it today it'd be 13% or whatever. I'm not expecting that to happen today. Now remember, equities, traditional markets, they did close green last week. Green also within the context of a descending triangle of their own, so they are still obviously consolidating, but they did have a decent move. We are waiting for the CPI report. That's coming out next month. Basically the consumer pricing index is going to show us the situation with inflation in America, and that's one of the main things that's going to add confidence into the market. Is inflation coming down effectively, and if it is, then yeah, people will be less fearful to put their money back into the markets, although it's still kind of a high risk kind of scenario despite the CPI potentially coming down, because there's so many other factors that go into that inflation. You just don't know what's around the corner at the moment, you know. We've got bloody monkeypox coming out at the moment. I don't think that's a problem to worry about. But you see what I mean? Anything, it's almost like anything it could happen. It's like we're living in some kind of TV series at the moment where every episode there's another calamity take place. That's one thing that we have to focus on, and that's coming in next month. That can't be charted on the TA. But what I can say is that this is boring. It's sideways and down, effectively with lower highs each time. We're looking to break either the resistance or the support. And at this rate, I would imagine, given this setup being a bearish formation and being below all major moving averages, I would expect it to probably break down. So that would be closures below these lows here, about 28,400 or so. On a daily, if we start to get closures like that on a daily, then yeah, we'd be looking for the next pullback. Probably sweep the recent lows, maybe even a little wick lower, and then maybe start to flesh out a range within that, and we would look to find what support of that range that we can play in. The descending trend line will still remain the same. That is still going to be there, and that is still going to be relevant. So will this old support, because this support again is the summer lows support, as in last summer's lows. So, and that would end up being a resistance, a significant one as well. So yeah, it's going to be slightly boring, and it's very much one of expecting some more lows to form, but those lows being significant ones where you would tell your granny to buy Bitcoin because it's actually become that time again, you know, and anticipate, you know, a significant low form. As I'm not talking, you know, like massive lows form. I'm just talking like the very likely chance of a bottom being put in, which is only 23-24% from where we are right now, give or take. It's not huge. It's not huge. Again, when you're trading, especially when you're investing, you work out your risk to reward, don't you? That's the whole point of anything that you buy. Risk to reward. Do I stand to make more than I stand to lose? Especially if it's a spot position where you're not really losing anything unless you sell at a loss. So you think about it, all right, I'm prepared to go in quite hard actually, you know, as we approach these moving averages, because the risk to reward at the 200 simple, 200 exponential to the 200 simple is only 13%, and the reward, obviously, given enough time, and again, you know, we know the speed of Bitcoin and the way that the market generally plays out. Spend less time going down, and we do spend way more time going up. You know, the risk to reward is phenomenal. And so, yeah, of course, you would think about buying in at any of those low levels. This is one of the reasons I've been buying all the way down. And the harder the support, the more significant the support, that the more I put in, for obvious reasons. And given what we've seen with the money flow index showing bottoming signals there on the weekly, same as it did 2018, same as it did 2019, same as it's doing right now, I would be looking for the next major low. And I'm talking like the next big major low, especially if we start to tease these moving averages on the weekly, to be like a very, very, very tasty opportunity for a long-term position for Bitcoin. It's time to start building a position, guys, a real position that will hold you through, you know, in good stead in the future. Forget about all the FUD and the bears out there. We know the deal. If you've been in Bitcoin or crypto for long enough, you will know the deal, that this is the deal. You know, everybody else doesn't want it. Everybody else starts to tout the perma bears or whatever, and how, oh, it's not got any value, there's no reason for it to oh, Bitcoin, I can't say it without throwing up in my yeah, of course, right? Yeah, I hear what you're saying. I hear what you're saying. You don't want to buy it, that's fine. You know what? That's fine. Just keep that to yourself, all right? You can say that all you like. I see where this is going. I see what it's done in the past. I see what it's doing now, and I'm pretty sure what it's going to do in the future. So yeah, of course, you don't need to buy now. You don't need to buy now. You just you do what you want to do. I'll be picking it up, no problem at all. Risk to reward is enormous. The lower we go, the risk to reward is even better. So the risk to reward needs to be matched with larger orders. From my perspective, obviously you guys do what you want. But yeah, I mean, if my grannies are alive, I'd be telling them to go and buy it. You know, I'd say, remember that stuff, Granny? That Bitcoin stuff you heard Matt Damon talk about that time? Well, yeah, now is the time. Okay. Anyway. Gone off on a tangent there, but I hope you have a nice day anyway. That's all there is to say about this. We'll wait for the next lows to be swept, given the way that this looks right now. And with equities, I would imagine this next month being a little bit choppy still. But any low, especially the major lows going to 25 and below, should be picked the hell up. Anyway, take it easy, guys. Hope you have a nice weekend. Speak to you later.